Hey guys, Dave Keller here with Market Misbehavior. I learned a lot from trying to fly an airplane years ago and have embraced my experiences as a student pilot. I grew so much, I feel like, as an individual and as an investor by applying a lot of the lessons that I learned trying to fly an airplane with the same thing I'm trying to do navigating the equity markets and the financial markets. So this series of videos is what I call a pilot's guide to investing. So a number of years ago, I started to try to learn how to fly a Cessna 172R. I had my first solo, I think in 2012. I should probably look that up before I publish the video. I actually literally cannot remember. 2010 or 2012, I forget what it was. But you know, I never finished it, and to be totally clear, I did not get all the way through my private pilot training for a number of reasons. I had to take a hiatus for some family issues and never really got back to it, but I have always drawn from those experiences. I have about 80 hours in the air, I would say, mostly in a Cessna, and I learned just a ton. I learned a lot about myself and what I enjoyed. And it's funny, I've often wondered why I actually got into flying when I did. And it's funny, I was super stressed out with what I was doing professionally. I was stressed out from personal things going on. And for some reason, flying an airplane, which to be honest, some have said it's, it's moments of terror, moments of sheer terror surrounded by, large expanses of serene, beautiful time or something like that. And that is exactly what I found. I picked a somewhat stressful hobby and a dangerous hobby as a way to relieve stress. And what's funny is in the end, I feel like I learned a lot about how I handled stressful situations. I learned I could do more than I probably thought I could when I first got into it. The things I did accomplish in that time, I'm super proud of, and I'm always hopeful I will be able to get back in the air. Now that we're in the Pacific Northwest, got a lot of mountains around us. I'd love to fly around this area when I can get to it. But really, the point of this series of videos is to go through and relate some lessons that I learned. Before I get to the 3 lessons, what I call the pilot's guide to investing, if you like this sort of a video thinking about how to invest and relating other disciplines back to investing, do me a favor, hit a like below there. Consider subscribing to my channel. I'd love to have you on as I continue to produce and nudge your thinking about investor behavior, decision making, and routines. So the 3 lessons that I would share with you are the 3 things that I learned from flying an airplane. Number 1, be prepared. Number 2, be aware. And number 3, be ready. Each one of those, I think, summarizes a key component of aviation, or what I learned from trying to fly, and I'll break down each one of them in the next couple of videos to hopefully help you think about how you could invest more like a pilot. And what's beautiful about what pilots are doing is they are trying to do a lot of the same things that you are, and this came to me as I was just going through my first couple of flights. My flight instructor, Adam, it turned out when he was not teaching people how to fly airplanes, he was investing. He was day trading stocks in his personal account. So once we learned we had that mutual interest of the stock market, a lot of the times when we'd be up in the air, flying straight and level, getting to another place, navigating, we had some free time to talk in the plane, we'd always chat about the markets and what we saw, and we very quickly found the similarities, because what pilots are trying to do is make decisions without having their emotions drive their decision making. It's all about having systematic, proven, rational ways of dealing with uncertainty, and flying around an airplane is uncertainty exemplified. It really is just all over the place, and anything can happen at any moment, just like with your portfolio. And so I found that the lessons that I learned, the ways that pilots had learned to deal with that environment and to take the emotions out of the decision-making process, were exactly what I was trying to do as an investor. So number 1, be prepared. I guess I knew how much pilots prepared their airplanes before they got started. And if you ever walk into, once we can all travel again more often, I haven't traveled in probably a year, which has been crazy, but when you walk into a commercial airplane, usually turn right to go down. But if you turn to the left, you'll see the pilot and the co-pilot, and they're probably doing a bunch of things. They'll have a checklist. It's an electronic checklist in a plane you're probably flying, and they're going through it. And the first time I flew an airplane, I had this paper checklist, this laminated form that I was using to follow and look through all the different things I needed to I needed to follow to make sure that the plane was going to operate as I expected. And even as you get thousands of hours in and you're flying commercially, intercontinental flights, you're still going through a checklist every single time you fly. And one of the pilots is going out onto the runway and looking and visually confirming that everything that should be where it is and operating as it should be is. And that's something you learn from the very beginning. Before you go out on the runway, we would sit down, my flight instructor and I, and talk about what we were going to do. We laid out our game plan all up front. All right, here's the map. Here's the sectional that we are looking at. Here's where we are now. Here's where we're going to go. We're going to fly around 4,000 feet. We're going to go to this area. These are the maneuvers we're going to practice. Then we're going to navigate back to this airport, land here, take off again, land back at our home airport. Should take us about an hour and a half, 2 hours. Any questions? And we kind of talk through the behaviors. We had a little miniature airplane. I don't have one, I don't think, here. Actually, this was a 3D printed airplane. True story. So when I first had an office in Cleveland a number of years ago, they had a 3D printer. This is in 2016, 2017. And they had a 3D printer in the office, and I have no idea what I was doing. It's not perfect, but I tried to print out a model of a Cessna using the 3D printer. Learned a lot about what not to do, but there it is, still there as a reminder to forward-looking technology is always fascinating to review, but it's a reminder of my time of the year. But you would literally take the little model and talk about as you landed and go through different scenarios and what the plane was going to do and how you're going to turn it and all those sorts of things. After as you would proceed out onto the runway, you have a checklist, and you literally have 100-some different individual things you're checking. You're checking the wings and making sure there are no big any damage to the wingtips. You're checking the pitot too, which is the way you get you check your pressure and the way you determine your altitude and speed. Making sure that the rudder and making sure that all the flaps and everything are in their operating correctly. And then you go in, and so before you actually get the airplane up in the air, you've checked and rechecked everything. You've powered up things and powered down things. You have made sure that the chances of a mechanical problem happening are minimal. There's still a chance, but it's a minimal chance because you've made sure you've checked and rechecked everything. And it's so funny as investors, especially now, as I'm seeing a lot of unsophisticated, maybe is the adjective I would use, but inexperienced is certainly the word. People that have not been doing this that long are jumping into the markets. And so, I'm finding a definite lack of preparation, particularly thinking about risk versus reward and thinking about what you are expecting, what you are looking for an investment, what you are positioned for, but also alternate scenarios and the probability, as small as it might be, of something really bad happening and what you would do in those scenarios. One of our next videos is going to talk about emergency preparedness. That's going to come into play a little more. But in particular, it's about preparation, right? A good investor, if you look at people that have had successful careers and have been able to generate positive returns consistently over long periods of time, they have really good routines, really good processes in place. They don't just jump in and guess that some stocks are going to work. They have a very well articulated and well tried and true process for identifying entry points, identifying exit points, identifying investment opportunities, testing those their assumptions and putting their chips where they need to or where they want to. But it's all about what you do before the trade. The trade itself, the actual moment where you put the trade on, is like getting the plane in the air. All the other stuff is the really good stuff, where you develop your thesis, where you challenge your thesis, where you gather evidence and try to understand what the markets are telling you, understand as much as you can about the potential investment as you go about, and so finally putting the trade on is sort of at the end of that preparation process. When I'm teaching new technical analysts or new investors trying to use charts, I always tell them to use a checklist. And when I teach technical analysis and when I've taught it at the college level, I have a 7-step checklist. And what I would do, I used to teach at Brandeis University outside of Boston, and what we would do is the very first class, beginning of the semester, we would learn step 1, the first step, which was Dow theory. Before you can do anything else with any chart, the first thing you need to do is look at it. Is the stock making higher highs and higher lows, or lower lows and lower highs? That was Charles Dow's definition of an uptrend and a downtrend from over 100 years ago when he wrote for Barron's. That's how he described trends, right? It's all about looking at the patterns of the highs and the lows. And so Dow theory is a stock in an uptrend or downtrend. Until you can answer that question, you've not earned the right to do anything else or tell me anything about your conclusion or your outlook for that particular stock or that particular chart. And then I go through this continued series of steps. So during the semester, we build up this checklist. And by the end, you have this 7-step process. And I always tell people, once you've answered those 7 questions, and it's things like, is the stock in an uptrend or a downtrend? What are the moving averages doing, and what does that tell you about it? Are we at any clear support and resistance levels? Any price patterns, relative strength, et cetera, all part of these 7 steps. And then at the end, fine, once you've answered those questions, then you have earned the right to say bullish or bearish, or buy or sell, whatever you are being asked to do. But you can't have your conclusion until you've articulated your process. And we actually, in my previous career, we did psychological testing. We actually did testing in a lab to see how people analyze charts and actually try to determine what their checklist, how their checklist played out, and went through it. And what we learned is, as investors become more experienced, as analysts have a lot more charts under their fingers, they actually do things a lot quicker, and they still have a checklist, but it's a much quicker decision point. They know the things that they need to look at. Yes, I'm bullish. And if you ask them, they can detail in a lot more structured way why they're bullish or bearish, but it's a very quick process because they've done it so many times. As an earlier investor, if you're just getting started, I would encourage you to sketch out your checklist. Decide what those series of steps are going to be, and then figure out what questions you need to answer before you can say you're bullish or bearish. I would also say, if you're an experienced investor, wouldn't hurt to actually sketch out what your decision tree actually looks like. What are the questions you try to answer consistently before you determine what to do with a particular stock or a particular position? I bet that if you list it out, there's probably 1 or 2 of those steps that you either don't stay very true to, you don't do consistently, or that you might be able to upgrade. Maybe things that shouldn't be on that list, or things that should be that aren't, and you can refine that list a little bit. Can you upgrade your checklist? Just 1 tweak or so, 1 or 2 tweaks as you review it. So the concept of being prepared is all about what happens before you get the plane in the air. And the same thing I would say is before you make a trade. Think of all of the stuff that should happen before you make an investment decision, and really think about how systematic you do that, how you make those decisions. You go through that process without emotion being the driver, but evidence, the information, rational inputs. Those should be the things you look at to determine whether to buy or sell at any given moment. That is the first of the 3 pieces of a pilot's guide to investing. I hope this is of interest to you. I hope it helps you think about your own checklist. I would love for you to answer under the video, what is one thing you think you could upgrade in your own checklist? What's one thing you could do better when you think about that time preparing for the trade or preparing for the investment decision? What is it you could do better? Leave me a comment below the video. Let me know what you think. This is Dave Keller here at Market Misbehavior. Wish you well. Fly safely, keep the blue side up is what one of my mentors used to say. We'll see you again next time.